Welcome to another Quick Bite video from the Insurance Domain Training Center. Today, we're looking at P&C insurance premium billing, with a specific focus on the US geography. Now, if you look closely at the P&C industry, you'll notice there isn't one standardized billing process across carriers. However, the foundational concepts are exactly the same. This video breaks down those core principles and explains the entire premium billing lifecycle. Let's dive right in.
Welcome to the Explainer. Today, we're taking a look at the P&C insurance premium billing lifecycle. Ever wonder what actually happens after a policy is priced, but before the cash officially hits the carrier's bank account? From the outside, it looks like a giant puzzle, but it actually follows a really logical rhythm. Okay, let's dive into this.
Now, if you look at the P&C industry today, billing, it kind of looks like chaos, right? I mean, why does every single carrier seem to bill differently? You've got huge variations between commercial and personal lines, completely different distribution channels like independent agents versus direct-to-consumer, and let's not even get started on the massive maze of legacy tech systems powering the whole shebang. The screens literally look like different languages from one carrier to the next. But, and this is the vital secret, underneath all of that fragmentation is a universal underlying financial engine. Almost every P&C carrier uses the exact same logical life cycle to get from a calculated premium down to settled cash.
So, to make sense of all this operational complexity, we're going to embark on a structured, follow-the-dollar journey. We'll hit 4 distinct phases. First, foundational billing concepts. Second, setup, invoices, and collection. Third, delinquency and policy endorsements. And finally, expiration and premium audits. All right, starting off with part 1, foundational billing concepts. Before we hit the timeline, we got to establish the basic rules of the road for how money flows. First up, bill 2 types. You have to know exactly who you're asking for money. We basically have 2 totally distinct paths. On one side, you've got direct bill. This is where the insurer charges the policyholder directly. You see this all the time in personal auto or home insurance. But then, on the flip side, we have agency bill. This is a totally different beast. Here, the insurer actually bills the broker. That broker then goes out, collects the full premium from the insured, takes their own cut, their commission right off the top, and then remits just the net amount back to the carrier. It adds a whole new layer of operational complexity, but you are going to see this set up constantly when dealing with complex commercial lines.
The second foundational role is a pretty cool concept called equity dating. When a billing system creates a payment schedule, it's not just randomly dividing numbers by 12. It's actively calculating those schedules so that the cash physically collected always covers the earned exposure, the actual risk the insurer has taken on up to that exact date. So, the crucial point is that if a policyholder suddenly decides to cancel their policy midway through the year, the insurance company is protected. The cash they've already collected covers the risk they provided, meaning the insurer never faces a financial deficit. Pretty smart, right?
Moving right along to part 2, setup, invoices, and collection. Okay, let's start our chronological journey. Phase 1 is what I like to call the trigger. This is the big handoff. The underwriting system has finalized the policy. It calculated the total written premium, let's just say it's $1,200, and it passes that data over to the billing system via an API or batch process. Boom. The billing system wakes up, it establishes the actual billing account, it applies whatever payment plan the customer picked, maybe an annual lump sum or a monthly 4-pay or 10-pay, and then it calculates the exact dates those installments are due, tossing in any applicable installment fees while it's at it. Once that schedule is locked in, we hit phase 2, invoice generation and presentment. Usually 20 to 30 days before an installment is due, the system automatically spins up an invoice. But it's not just a single, simple number. That invoice has to clearly break out the buckets of money. It separates the core premium, the state taxes, which is absolutely critical for things like surplus lines, and specific fees. And once it's generated, it gets sent out. Back in the day, that was just paper mail, but today, we're talking email or even rapid SMS text alerts. Which brings us to phase 3, payment collection. The insured gets the bill, and it's time to pay up. Now, in modern P&C, cash comes flying in from everywhere. You've got ACH, credit cards, traditional paper checks routed to lockboxes, online portals, you name it. All these channels create a massive, continuous stream of incoming data and cash that the billing system has to process.
Now, what's really interesting about this slide is the strict payment priority rules when that cash physically breaks apart. Processing that money is where things get super complex. When a payment hits, it doesn't just get dumped into one giant pot. If a customer short pays their balance, the system legally has to know exactly what gets paid off first. Check out this priority list.
Usually, the very first bucket to get filled is past due fees. Next up, past due premium. Only after those are totally satisfied do the cash flow over to current fees, and finally, down to the current premium. All right, part 3, delinquency and policy endorsements.
So, we're hitting the speed bumps now. What happens when the money simply doesn't show up? Phase 4 handles delinquency and non-payment. Since insurance is incredibly regulated, missing a payment slams you right into a regulatory wall. State laws strictly mandate this exact legal timeline, and let me tell you, they do not mess around. On day 1 after a missed payment, a late notice fires off, starting a grace period. If it's still unpaid by, say, day 15, a formal notice of cancellation, or NOC, is legally issued. And finally, if they pay during this window, the policy is reinstated. But if not, by day 30, that reinstatement window firmly, permanently closes.
Now, let's say the policy is active and everything's fine. Reality still changes, right? Enter Phase 5, endorsements. Say a policyholder adds a new car midterm. The policy system calculates a prorated change in premium, and the billing system has to catch that change on the fly and dynamically adjust the remaining future installments. If the change actually lowers the premium, the system might instantly shrink the future bills, or it could even trigger an automated refund check. Honestly, this dynamic recalculation is one of the absolute heaviest processing lifts the entire billing engine does. Finally, bringing us to the finish line, Part 4, expiration and premium audits. Phase 6 introduces what we like to call the commercial twist. This is super unique to P&C compared to, say, life or health insurance. For complex commercial lines like workers' comp or general liability, that initial premium we talked about way back in Phase 1, that was literally just a guess. It was an estimate based on projected payroll or revenue. And as anybody who's ever run a business knows, early projections are basically never perfectly accurate. Because that initial premium was just an estimate. At the end of the policy term, the insurer runs a premium audit to find out the actual, real-world numbers. And this brilliantly illustrates how dynamic P&C billing really is, because you get one of two final outcomes. If the audit shows the business grew, more payroll, more exposure, the system generates a final audit bill to collect the difference. But if the business actually shrank, the system issues a return premium check, putting cash right back into the insured's hands. So there you have it. We've walked through the entire logical life cycle, from setup and cash collection, over the regulatory walls of delinquency, all the way to the final commercial audit. It's a remarkably consistent financial engine humming just beneath the surface of all those fragmented systems. Which leaves us with a pretty fascinating question. If this underlying logical life cycle is truly universal, how long until technology finally standardizes the P&C billing engine for good? Think about that. Thanks so much for watching The Explainer, and we'll catch you next time.
Thank you for watching the Quick Bite series from www.inzu.com. Please like and subscribe to our videos for you to get notification when we upload new videos.